All right, what is up, YouTube? I'm back again with another video. So today we're going to talk about different opportunities that are in the market and the historical returns that you should be paying attention to. That the Nasdaq is always positive for this month of January, and you should always pay attention to whenever they put out historical facts just like that. Because if you see now, the Nasdaq has been positive so far throughout the year. So let me go ahead and start to share my screen and show you my portfolio. Okay, so starting off my portfolio, like I said, I lost the last account that I did have, and now we're starting back over fresh with 200,000. Now we're at 205. So as you see, we are starting to grow a little bit faster. So we've broken that 1% gain in our portfolio. So now we're way past that, and it looks like we're gonna go to 210 sometime in the future. So I bought Berkshire Hathaway B class because that will go up in the future. I bought Microsoft because that is poised to go to $100 really soon because of the strength and the momentum that I'm seeing from a lot of these Nasdaq stocks. We have the triple Qs because that is the Nasdaq itself. We have Starbucks just because I do hold that in my personal holdings. So basically, let's check out the natural gas. Let's check out oil. We see natural gas is definitely right there in the RSI showing us it's around about even. But what's really interesting about oil is that we see a top for oil about $62, and we see that it's still overbought. I do have a short position, a small short position on oil, and once this $61 handle breaks, we might see it go to we might see it go down to 60. It looks like it might challenge that daily moving average right here. And, we might break below that. So, like I said, there's always possibilities to be able to short those stocks. DWT is what I'm playing right here. We see that DWT is oversold. So we are starting to get back into the regular territory. So we see DWT is oversold. UWT should be overbought. So, like I said, it's leverage, three times the return. So if oil's up 1%, you'll get that 3% return. Or if oil's down 1%, you'll get that 3% return. So it just depends on if you can handle that leverage return, or if your account can actually handle that leverage return before you actually start to buy these stocks. What's very important today is that. Take Two Interactive looks like it's getting ready to break out past that all-time high that it set last year at that 120.62 level. Right now we're trading at 119.70, and it looks like it will break higher. I do have this in my personal account. I got a new position in on around about $71. That's my average, and as you see right here, we might just double what I bought last year, and it looks like I might add more to this position. Not sure yet, but we do see the momentum for this stock is starting to carry up even further. Let's go to Activision Blizzard because these are the stocks that are starting to rally. Like I said, when we talk about the video game stock or we talk about the video game sector, they all move in lockstep with each other. So we see Activision Blizzard is now starting to approach a new all-time high. So we see 67.40 is the all-time high for that stock, and right now we're trading about 67.03. Let's go to EA Sports. EA Sports is about $9 away from the all-time high. So what you could do to capitalize on that, maybe you could buy a couple shares here and hold it all the way until it starts to break out towards that all-time high. And that all-time high is 122.79. So with that being said, we must pay attention to where the sectors are. Also, I got a position in on utility sector. We see the utility sector is oversold. Momentum is starting to build back up for that. And what you need to know is that whenever you have opportunities like this, I know utilities beat the stock market. I think it was last year. But when we get opportunities like this, when we start to see stocks become oversold, a lot of those stocks that we see run up and they become oversold, this is our opportunity to go ahead and buy it. So pretty much, I just bought. So pretty much, when I buy the XLU, this is a diversified ETF. So I bought maybe I think it's over five companies or five small percentage of companies that I do have when I did buy this. So I had a really low buying price right here. So I bought around 51. It's low 51s. So now I'm starting to make profit, and I think this goes back up to 57. Maybe breaks an all-time high. So we have to calculate our profits just in case it doesn't pan out like we want it to pan out. Like what's going to happen when it goes to 50? Should I sell at 50 or should I hold at 50? Or what happens when it goes to 55 and kind of tops out? Should I go ahead and sell? So these are the things that you should be paying attention to, or the type of strategy that you should have when these trades give you opportunity to trade them in the market. So let's go to Roku. Roku has been a stock that's definitely on fire. We see it right here. IPO around $15, 15.75 was the low, and now it's at the high was 58 8. So like I was telling my friend, I said this stock won't be touchable for me until it gets back to that $30 range. As we see right here, 44 is about $4 or $4 to $5 off of that $30 range. So it looks like we might get it sometime soon. But Roku is definitely progressing, is definitely growing as a company. But the only thing that I have a problem with is purchasing the shares so high just after the company IPO'd. Basically, the only reason this company spiked up is because people, they didn't know how to gauge it, they didn't know how to set the expectations for this company. So that's pretty much why you see this company on a tear each and every day, or why you might see it go from 15.75 to $58. People didn't know how to gauge this company, but the next earnings report, we should see how this company reacts. So, like I said, I don't buy companies just as they IPO in the market. I know a lot of people might disagree with that, but at the same time, we can stack up returns and we can see how you pan out versus how I pan out. I did over 50% this year. We can see how you did. What's going to happen here is that people are going to sell this stock off if the expectations have not been met, or if this company has not been growing as the news feeds say they've been growing. So we must pay attention to that as well. So let's check out the gold contract. So pretty much I'm just about everywhere in the market. I'm looking at all opportunities. So that's why you might see me go from Roku to gold. You might see me go to oil to gas. You might see me go from different tech companies to other companies. So I want to show you that there's always opportunity in the market for you to grow your money. So we see gold is definitely in that resistance level. Whenever it gets past that $1,300 level, that's when gold starts to have problems. And as we see right here, 1,300 right there, tries to get 1,300 right here. And pretty much 1,300 is just that hard spot for gold to, keep turning back up. So, like I said, I sold the gold ETF around the high $23 levels, and I was able to buy it when it was oversold. So I bought it when it was oversold, sold it when it was overbought. So I pretty much followed my strategy perfectly, and I was able to profit just about over, I think it was $2 a share, just about. So you have to have a strategy. You have to make sure that your strategy actually works. So when you get to put it in a position to where your money is growing, you want to make sure that your strategy is going to actually pan out the way you say it is going to pan out. Or if it doesn't pan out, we have to have that plan B in place, just in case something were not to happen like you expected it. So we see the daily moving average might act as support for GDX. We see daily moving average calls for this thing to maybe find support around the 20 or the low $23 level. And if it does not find support, we might see this thing fall all the way down. But like I said, it does follow not so much the gold contract, but it does have a basket of gold stocks that it does follow. And those basket of gold stocks, they do follow the gold contract. So sometimes this thing it might not be in lockstep, but you know why? Because it does have several gold companies that the GDX follows rather than the gold contract. But if you're looking for something that follows the gold contract, we can follow UGLD. Pretty much gives you that 3 times return. But pretty much what I'm going to be looking at, DGLD. We see DGLD is getting out of that oversold level and starting to creep right back up and starting to get some buyers. And this is pretty much the way you short gold. Like I said, gold was in that resistance level to where when it gets past $1,300, that's when it starts to have trouble and falls back down. So what you might be looking at is, shorting gold all the way down till it gets below that $1,300 level. So when we trade stocks, when we invest in stocks, we have to make sure that we're always covered just in case something were not to happen. So let's check this out. So if we go to the QQQ, what happens when the NASDAQ falls, right? And let's go ahead and short the QQQ, and we can buy the SQQQ, and this is a way we can actually profit on the NASDAQ falling. So a lot of these ideas come from my head because I memorize all of these tickers. I've memorized all of the symbols because I've traded them before. And pretty much when something goes up and when it's pretty, when it's topping out, just like the natural gas sector, if it tops out right there at the $3 level, we have to make sure that we have precautions in place so that way we can make money on the way it goes down and the way that it goes up. So you have to have those ideas set. You have to have those strategies set in your brain, so that way you can profit. You can always be in a profiting situation rather than in a loss. So pretty much, let's say we can only make money on the way that it goes up. So let's say we made money. So let's say we made money on a stock that went up 50%, but then again, it fell down 50%. So you're missing out on that other 50% return that you would have had if you knew how to play the stock. So it's pretty much, it's a strategy game for you to keep making money, keep making profit. And you have to be, you have to stay on top of your game so that way you know exactly what's going on. So Bitcoin really hasn't been moving up. Let's see if we can go to the Bitcoin has pretty much been a boring stock so far. We see technical resistance right there at the 19,000 level. I thought it was going to top out at 20,000, but it topped out at 19,000. I thought we were going to have some support right there at the 15,000. 15,000 didn't hold, so there's two times that we already crossed through that $15,000 level. I'm not sure how long Bitcoin can keep doing that, breaking past 15,000 and going below 15,000. At some point, this thing will top out and keep going lower. So pretty much we set a resistance level of 19 and we set a support level at 11. So it might trade at that range. And like I said, if it cannot go past $15,000 again, we're going to see this thing go below $10,000. That's pretty much the way it's going to go. And we might see a downtrend to where Bitcoin is going. So pretty much you want to pay attention to how these cryptocurrencies are moving. You can always use technical analysis towards those cryptocurrencies. You can always use technical analysis on everything that you trade. But those technical analysis, such as the 15, 20, 25, they are very crucial when you trade these stocks, because we know that certain support levels, certain support and certain resistance levels, they must be held in order for a stock to move higher. So if they cannot be held, the stock will continue to go lower. But like I said, the Nasdaq does have a positive month of January. It's shown historically. Dow Jones and S&P 500 usually lose money, or they finish the month in red for the month of January. So we want to pay attention to that. So let's see if we can, get a little creative here. Let's see if we can go ahead and let's check out the QQQ. We're going to play the QQQ by the lines. We see it's overbought. So let's see if we can. Let's go ahead and sell our QQQ position. We might as well go ahead and just dump it out. We've made our profit. Let's see. We have about 400 shares in the QQQ. So we go ahead into the bid. We're going to sell our 400 shares. Let's see. 400 shares for the QQQ. We're going to place a market order. We don't want to really place a limit because it does take a long time for that thing to be filled. So let's go ahead and place our market order, and we've been filled right there. You see it right there, and pretty much we took home some profit there. So let's go ahead and check it out. Our profit has been made. So let's go ahead into the Microsoft Office, or Microsoft pretty much. So let's go to Microsoft. So Microsoft is getting way overbought, and like I said, I want to get Microsoft in on a really cheap price. But when we get to this overbought level, that's typically where I tend to stay away from those stocks, because that's when you pretty much open yourself up to a loss being occurred on the day. So let's go ahead and set this to a limit or a market. So we're going to close it at the next best price. That's pretty much what a market order is. You're closing at the next best price. If you put a limit order in on here, you'll be waiting for a while. But I want to, get this thing out of here at the next best price. I know it won't be at 87 or some crazy price like that, but it'll be at the next best price. So pretty much what we're doing, we're capitalizing on all the profits that we do have. So instead of it becoming unrealized, now it's a realized gain. So we can go ahead, we can probably dump our Starbucks. But what I'm going to do here, we're going to start to short the market. We're going to start to open up different shorts for the market. But we do see Starbucks is kind of turning up with that momentum. uh, it's kind of hard for me to go ahead and sell Starbucks. So we might just, maybe sell half of our position, or maybe just leave just about 300 or 100 shares of Starbucks in there. So let's go ahead and confirm that. So we've been filled for Starbucks at 58.96. So our position should be really light. So you see right here, our year-to-date money that we made, about $6,000, and that's just because of the year has started. Like I said, new year, new investment account. So what we can do, we can dump the Berkshire Hathaway, and we can make this just a trading channel. So let's go ahead and try to do that. Let's try to make this a trading channel. So let's go ahead and in our Berkshire Hathaway, and let's dump. Sadly, Berkshire Hathaway is starting to turn back up, but I do have this in my personal account, so I won't be really missing out on that move because I'll have it in my personal account. So let's go ahead and sell, majority of our Berkshire Hathaway. Oh, I put a limit in on it. So limit fills you in on pretty much a specific price, and I don't want a specific price. I just want to be filled at the next best price because this is a simulated trading account. Those little couple cents really don't matter unless it's a real real life situation. So let's see how much money we have to play around with. So we have about $91,000 to play around with. So what we could do, we could check out the DGLD. We see momentum is bringing up, so let's go ahead and check out the DGLD. Let's go ahead and we're going to go ahead and buy, let's say, 300 shares of the DGLD. We're going to start to short gold as gold goes down. So let's see, confirm. So now we bought GDLD. We got filled at a pretty good price, $42.36. So now we have 3 cents of premium. But we do see momentum is definitely coming back up for the stock. So there's another one. We have DGLD. We're up about $12 on it. It really doesn't really matter. We put about 6,000 in there. Buying power effect. So let's see. We can get another one in here. So let's see. DWT. Oil is definitely oversold. Or excuse me, oil is overbought, but the short is oversold. So if that makes sense. So this pretty much bets that oil is going to go down. Whenever oil goes down, the stock goes up. That's pretty much what it is. Let's see what's going on here. So since it is a, pretty much like a penny stock, according to our count, let's see, leverage is really going to, spike up the account pretty much for, okay, so we filled 13.11, and that's what I'm talking about for those market orders. You fill at next best price. So the stock is trading at 13.09. We got filled at 13.11. So pretty much we started our position off with a 3 cents loss per share. So that's the difference between trading with those market and limit orders. So right now we have about $78,000 free to trade around with. Let's see what else we can get here. So the market is just heavily overbought, and we need to plan ourselves for that event of when the market does fall. And we see the Dow Jones is turning negative right now. Nasdaq is still somewhat positive. S&P is somewhat positive, but at the same time, we want to make sure that we are planning ourselves or planning accordingly. So when something were to happen, so let's go ahead and get 1,000 shares in. Or maybe let's do 2,000 shares of the TVIX. And it's pretty much bets that, this is pretty much protection for when the market goes down. You'll have some protection. So this stock will go back up when the market goes down. So we got filled $4.81. So now our portfolio is pretty much just shorting stocks. That's all it is. We're just shorting stocks and commodities. We have DGLD, we have DWT, and we should start to incur losses because this will probably be a long-term position to where, we might hold this for a couple of weeks and we will start to see profits. But right now, we are occurring little small losses. So we see TVIX, we bought TVIX, DWT, DGLD. We sold our Microsoft. We sold our triple Qs. We have a small position in on Starbucks, small position in on the Berkshire Hathaway. So right now, like I said, we're just shorting the market, trying to see what's gonna happen, what's gonna fall. We have to pay attention to see which stocks are oversold in the market. So this will be all that we buy for today. Tomorrow we might see what the market does or what the market gives us tomorrow. But for right now, this is all we looking at right now. Also, we can get into the XLU simply just because that's oversold as well. We see momentum is definitely pointing up for that. So let's get in just 300 shares of that and see exactly what happens here. I gotta stop sending these limit orders. Limit orders really kind of are boring. So let's go ahead and do about 300 shares of XLU. Okay. Okay, so we filled 51.57. So we started the position off with a loss because the stock trades at 51.53. So unless there's something to where there's just amazing growth where it happens in the market, this thing will pretty much just follow through because the markets are overheated. People are going to take their money out at some point in time because people are just letting their money ride. And at some point in time, people will be taking their money out. DWP, Dow DuPont, let's see what that's talking about. I just seen somebody talking about that. Very overbought. So we could just short all the stocks until something opens up. That's what looks like what's going to happen here. I'm just going to short all the stocks until something opens up. And when it opens up, we're going to go ahead and take a long position on that stock. But as for right now, we're going to be very cautious with buying stocks. So you see me like I said, just go back over it. We see me taking profits in Berkshire Hathaway, Microsoft, triple Qs, Starbucks, and we just kind of lighten those positions up. And some positions we did take off fully off the table. So we're going to be careful. So far in 2018, we're not going to force anything. We're not going to force any trades. Right now, we're just going to look to short the market. And that's all we're interested in, just shorting the market. And if something opens up for us, something opens up. But pretty much we just bought everything that was oversold. We're going to see how that pans out for us. So that's all I have for you guys today. My portfolio is up today. I haven't really taken any losses so far since the new year began. But at the same time, I still want to be very cautious. This is why this is why I bought DWT in my personal account. Also, I bought TVIX in my personal account. So I want to be very careful to when the market does fall. I do have a plan B to where I can still make money in my portfolio while my long stops are falling. So take care, guys.